Welcome to Seeking Alpha's Editors Roundtable, what moved markets this week for the week ending Friday, October 29th, the last week of October, a very eventful week. We had a lot of earnings. There was a rally for stocks, the fourth straight week now that stocks are up. And we had a certain rebranding of a certain company formerly known as Facebook that also rolled out the Zucker bot in a video that was kind of a little bit ridiculed, but we'll talk about that a little bit later. So very eventful times here. What a time to be alive. Joined here by four individuals who are certainly very happy to be alive. Actually, three of them. I am one myself. But joining me are in no particular order, Brad Olison, the VP of News, Kim Kahn, Senior News Editor, Stephen Alfer, Managing Editor of Breaking News. He's back after a week absence when we believe he was busy counting his Bitcoins, but another story. And I am your host and moderator, Nathaniel E. Baker, as Senior Editor of Strategic Contributors here at Seeking Alpha. I will now kick it over to Kim Kahn to give us the big picture overview of what moved markets this week.
Well, as you said, we've got markets looking at a fourth straight week of gains. I kind of want to look at the economic picture because it's not often I get to say this, or maybe ever, that a Bank of Canada announcement reverberated around the world. But that's what happened. They ended QE abruptly and also pulled forward tightening expectations. And the Canadian yield curve flattened out, and that flattened out the US yield curve the same day, kind of took its impact on Europe as well. And so you saw a wild move in treasury yields this week, and what Jim Reed of Deutsche Bank called almost a silent taper tantrum on the short end, with short end rates really going up as the longer rates fell. So that, now we're looking at a yield curve steepening again today. So we're kind of going to back going in. It was a blackout week for Fed speakers because they got their decision coming up next week. But all in all, the equities though just shrugged that off.
Yeah, equities have certainly shrugged off a lot of stuff, and it begs the question who the winners and losers were this week. Take us through that, Brad.
I mean, part of the reason they can shrug it off is because earnings are doing extremely well. I mean, this is a big week for earnings. And according to Deutsche Bank, Q3 earnings season tends to be delivering the sixth blockbuster quarter in a row, according to Binky Chadha, the chief strategist there over at Deutsche Bank, with 85%, I guess, of the names beating, and the size of those beats were quite tremendous. And so it should be no surprise that some of the biggest winners were names that were riding some of that momentum. Tesla obviously reported not this week, but it's still riding high on a little bit of that. And they also had some other tailwinds. Enphase Energy is a solar name. They also had earnings this week, and they also had some other tangential tailwinds. The biggest news obviously was Hertz's deal with Tesla for thousands of vehicles. I guess some people in the Northeast might say the bigger news was Tom Brady now shilling for Hertz in some of that partnership, but that kind of helped Tesla lift even further kind of into the common. The common man is now going to be able to rent more of these Tesla vehicles. Enphase also, like I said, has earnings, but they're also named a favorite by Bank of America ahead of the COP26 summit. That's kind of an alternative energy summit. A lot of nations are trying to go towards net zero in terms of emissions. Another interesting name that was mentioned among those Bank of America favorites was our favorite stock to talk about here on Generac on this show. And another big winner this week, which is Lucid. That's LCID. It's another EV maker. They were up about 53% this week prior to the Bank of America note, mostly because I guess a lot of their vehicles are now hitting the pavement and getting deliveries to some of its clients, if not already, or into the next couple of days. So those are some of the two biggest winners. Tesla was up 20% while we're talking about it. Microsoft, another big winner, not on a percentage basis necessarily, but now taking the crown from Apple as the most valuable company, because Apple did whiff on some of their earnings. They tend to be very, very strong, but I guess they can't get their products into the hands of customers fast enough. That's a good sign, but also a bad sign. They do have a rather quick refresh cycle. So if they can't get those products into their hands quickly, then, that might delay some of the oncoming projects in the future. Alphabet also did well. That's the Google parent. They're minting money with their biggest quarterly revenue gain in 14 years. The flip side, just to quickly kind of run through those, Twitter shouldn't be much of a surprise after the snap warning last week regarding to the Apple privacy moves, which are hurting some of the revenue there. And then we also had some defense contractors, Northrop Grumman and Lockheed Martin, citing supply chain issues for some of their weakness in their results. And then, some of our crypto fans who listen to us will probably note that Robinhood dropped 10% after earnings. Their crypto revenues from trading fell 75% from the last quarter alone. So quite a ding there.
So Stephen, take us through what you've been watching this week.
It's just a lot of earnings. I've read a number of press releases, a number of conference call transcripts, and I mean, as if there was any question anymore, we're smack in the middle of an inflationary boom right now. Amazon expects to incur billions of additional costs thanks to supply shortages, increased wages, supply chain issues around the globe, increased freight and shipping costs. So Amazon kind of speaks for all companies kind of when they said that. McDonald's says they're seeing wages up 10%. Their franchises are seeing wages up 10% year to date. Company-owned stores up 15% year to date. They expect to be raising prices about 6% this year. So, the transitory kind of goes out the window when you start feeding through to wages, right? The price of oil can rise, it can drop, but wages are very sticky.
With that, move on to the next segment of the show where we discuss our favorite story ideas. No, actually our stories, not story ideas. That's in the editor's meeting. But Seeking Alpha articles, tweets, or other things that we have seen in our travels.
Well, I'm going to go with Facebook deciding to change its name to Meta, which, it got a reaction that might have been expected, but I haven't seen anybody who was positive on it, but certainly something that the company felt it needed to do. We got the kind of usual market reaction to that, whereas there's already an ETF that invests in metaverse stocks with the ticker symbol Meta. That saw a spike in volume when the announcement was made. It's kind of good for it on both ways because it holds Facebook as its third biggest holding. So so it's gonna benefit either way from what Facebook does. There's another company, Meta Materials, that saw a pop. And then we have the acronym of FANG, which now Facebook has changed its name, even though that we didn't change it when Google changed to Alphabet. We've asked our readers maybe it's time to change up FANG, and they come up with a lot of good ideas. And my favorite actually was when they decided, okay, let's add in NVIDIA and Adobe and go for the kind of Muppet song "Mana Mana."
That's great.
When we'll be able to get out of their head now.
That's awesome. That is truly awesome. Brad, what about you?
So I'm going to take Steve's, I guess this is just one big thunder stealing episode from Steve, but I'm going to take over the crypto mantle today and talk about the previously least favorite Japanese dog, the Shiba Inu. We talked about Dogecoin a lot in the past couple of months, but Shiba Inu now has overtaken a variety of crypto names, including Dogecoin, in terms of the market cap. It's been dubbed the flippening, and the value there is just astronomical for what is supposed to be a meme-inspired cryptocurrency. I haven't seen real uses for it that people like to ascribe to Bitcoin or Ethereum.
Stephen, what about you?
I'll just continue or add to the hyperinflation item with Jack Dorsey. A few hours after Dorsey, that article came out, Kathy Wood kind of got back into it, and she, it's nothing new. She's been arguing that the technological innovation, the deflationary forces unleashed by that will far outweigh any kind of cyclical inflationary forces.
In the meantime, investors can hold on to their Canadian dollars as an inflation hedge, I guess, if the central bank in Canada is raising rates. Canadian dollars, which, by the way, despite their name, have the Queen of England on them, which is not the most puzzling thing about Canada. That would be the marijuana leaf on the flag. But this is another story for another day. My favorite issue article this week, once again, going back to the pro editors section of Seeking Alpha, where I spend almost all of my time these days. And this is a piece by Laurentian Research, and they talk about the coming super cycle for commodities. Actually, they say it's already underway, and that this is the fifth one in human history. I don't know when the other four were, but one, I guess, concluded in 2008, potentially, or maybe a little afterwards, driven by China. But they say there's another one now that's going on, and that investors should increase their exposure to commodities via ETFs or individual stocks, and name a couple of them. I'm not going to repeat it, but it's a very interesting piece here and goes along with the whole inflation thing that we're talking about. Certainly commodities would be one inflation hedge in addition to the Canadian dollar, I guess. So that's what we have this week. With that, we thank you for paying attention to us and watching or listening, as the case may be. If you were listening and you want to watch, you can do so on Friday afternoon at 4 p.m., which is when the video airs on the website seekingalpha.com. And the audio version, which is going to be longer, that is out on Saturday morning at 6 a.m. on the Wall Street Breakfast podcast account. And with that, we wish you a happy weekend, happy Halloween, and look forward to speaking to you again next week.